Welcome to TVBS Meeting Room, where we tackle global issues with a view from Taiwan. I'm your host, Wenqi Yu. Today's guest is Jacob Helberg, a national security expert and a commissioner on the U.S. China Economic and Security Review. We're glad to have him back to talk about U.S. concerns of TikTok, Chinese technology companies, and investments. Welcome, Jacob. Why is TikTok such a big concern to the United States national security? Isn't it just a social media app for fun?
There are three big concerns that policymakers often debate in the US. The first, and perhaps the most minor, is a trade reciprocity concern. China doesn't allow any American content platform in China. It banned most American content platforms in the early 2010s. The second, which has really been brought out in full technicolor in the last year or so, are the propaganda concerns. The fact that there are concerns that the Chinese Communist Party could use its control over TikTok in order to push state propaganda and the CCP's political agenda in the US on 170 million devices. Third, the data security and surveillance, which has been one of the long-standing perennial concerns with the app. The fact that the Chinese Communist Party is able to instrumentalize its control over the app in order to surveil, access the microphones on the cell phones, monitor a user's activities on other applications, and harvest American user data for China's political objectives.
Do you wish to see the US basically without any presence of Chinese technology companies?
Have to look at the Chinese Communist Party's ability to exercise jurisdictional and political control over that entity. And so location of the headquarters is one aspect, but legal ownership and control is another. If you remove the legal and the financial ownership piece, you actually solve a lot of the issues, provided obviously the location piece is addressed as well. But those three criteria are, in my view, the most important ones.
What is a better way of doing business and fair competition and all these aspects? And on that, you also have been behind the initiative to sort of stop more US investment from flowing to China. Do you think that's possible?
In a world where a lot of companies are looking at de-risking and moving some of their operations to Vietnam and India, they still have to continue maintaining a lot of their legacy operations in China. And I think a lot of the types of investments that you're seeing are actually being deployed in China to do just that. So I think it's not realistic to ask our companies to move everything overnight, because the reality is China has a lot of infrastructure that's very sticky and very hard to replicate elsewhere in a short amount of time. I think we really need to have a holistic recalibration of our entire trading relationship with China. And I think, the easiest place to start are tariffs, software restrictions, and capital flow restrictions.